Coming up on this week's Redcast.
Where you've gone from a paper atlas to a sat-nav sat on your dashboard, you can see the benefits of that straight away, right? And it's a similar experience from this point of view. And once you've achieved that, you have compliance by design, as we call it. So you plumb in your destination, the sat-nav takes you there, and you're there. And if you want to add in different jurisdictions, you program the thing to allow you to do that.
What we're trying to do is engage those difficult kids at the back of the room who never properly engage with the process and get them to raise a hand and ask intelligent questions and answer and get involved in the dialogue.
If we're really honest with ourselves and we're really looking at reality, it becomes complicated. So that means that we need to be confident in being honest and admitting that we're not always going to get it right. And when we have these dashboards that assess culture, really what we need to get comfortable with is it not all being green?
My outcome is no surprises. It is easier and eventually cheaper to work with me and compliance people to prevent a surprise or to anticipate something and prevent it happening than it is to come to me after the surprise has happened.
What we're looking at is being able to take all of that, have the answers already available to us upstream, implement those in the business in a much more efficient way, and then you get a much better outcome for your customer, exactly as Roger says. And you can do all of this much more cheaply and efficiently than you can at the moment. So from my point of view, it's a no-brainer.
Welcome to Redcast,
where we shine a light on banking digitization. Hello, welcome to Redcast, where we shine a light on regulatory change and how financial services is managing digitalization. I'm PJ, CEO and founder of JWG. Today is the 1st of June, and we're pushing into a brand new area for Redcast. We're talking about digital culture audits and all the accountability rules that have gone in place globally. This theme has been building up for a while now, and it's finally in a real strategic place, and it's part of a much bigger conversation. It also kind of kicked off in the UK back in 2016 when the UK took a leading role in resetting the way the industry thought about management accountability. It sort of pushed beyond the US's Yates memo and took a different line than the EU suitability guidelines. It really asked the firm to name and shame and identify who was responsible and report that to the regulator and then prove that it was managing all of that stuff. And it's a 5-year-old regime. And then, of course, as anything, it has grown. It has really picked up a lot of new conduct discussions, culture discussions, even diversity. And what we've seen in looking at all the regimes as we've gone through it at JWG is that the Asia Pacific and the BEAR and the MIC regimes have really followed suit along with Ireland in the SEER regime. But there is a disconnect here, and accountability isn't like trading. There are no transactions where you have to reconcile them. So we're thinking about this as a requirement to avoid trade breaks or accountability breaks. So as an umbrella concept, the system needs to hang together. And obviously, the more digital it is, the easier it is for things to trip into new jurisdictions with new rule sets that people aren't really familiar with. So it's been a fascinating set of conversations with our stakeholders to figure out what this all means. And there's a lot of confusion out there in the industry. So I'm really, really pleased to be able to introduce this Redcast because we've got a great lineup of speakers, including a brand new book out there to help everybody called Culture Audit and Financial Services. And I'll put the link where you can get a discount to this book in the show notes. But first, let me kick over to the speakers. Let me say hello first to Alan from Apiax. Hello.
Hi, PJ. Hello, everyone.
Great. You want to just tell anybody briefly about your job now? And we met back when you were with the FCA, but you've moved on.
Indeed, we did. Yes, back at the FCA, I was looking after the handbook of rules there, and we were working out how we might be able to digitize those and do machine readable rules. And during that time, the RegTech boom sort of kicked off. And one of those companies that looked very interesting was Apiax. And I joined them. I made the leap over and joined them in 2019 because they have a real solution to the problem of machine readable rules.
Fantastic. Well, you're a poacher that's armed and ready to go now. Roger, let's start. Get you introduced. We haven't been on a Redcast before, but you're no stranger to JWG. Why don't you do a quick intro?
Hi, PJ. Thanks very much for inviting me, and it's very timely because of the book that's just coming out. Thank you. So I run the main thing you'll be aware of my organising is a thing called the UK Finance Conduct and Culture Academy, which trains mainly bankers, heads of conduct, and line managers throughout banks in the complications of the conduct and culture regulation, particularly this new thing called culture assessment, which we're going to be talking about. In a previous career, I worked as an accountant and then in investor relations before retraining as a business psychologist back in the noughties, just in time for the banking crash. And I've taken a keen interest in the misbehavior of people in financial services and what we can do about it ever since then.
And Elizabeth, we have to give you an edge over Sam because you're located at an evening time zone, other side of the world. Please give us your quick intro.
Thanks, PJ, and thank you for inviting me to participate in this as well. So I'm also a psychologist, and I've been working in this field of assessing culture for my whole career, but for the last 10 years or so have been looking really at how culture affects conduct and risk management outcomes. And so that sort of took me into the field of regulation as well, of course, because regulators have a lot to do with influencing good behaviour in institutions. So the work I do right now, I run a small firm. We really work with regulators as well as institutions to assess culture and its effect on conduct and risk.
Fantastic. And you actually had 2 chapters in this book that I read from memory. And Sam, last but not least, what do you do?
I am a lawyer in financial services, advising mainly wholesale markets firms on all of the issues that we are discussing today.
And no stranger to Regcast. We could find him on many different topics. I'm very pleased to have you along at this one.
There's no opinion I don't have, PJ.
We know. So I guess we want to kick this off with a series of 3 or 4 questions just to have a bit of a round robin. The first one we wanted to get into was, what is the future global accountability matrix going to look like for senior managers? I talked about all these different regimes, but how is that going to work for a global institution? And Roger, I want to come to you first. If you're a senior manager of one of these global institutions, you must have some cold sweats. What's keeping everybody awake at night?
Sure. I mean, behind the question is the whole question of the regulatory direction of travel. And I think what we're seeing is increasingly treaties between securities regulators and supervisors of capital adequacy. They share each other's research, and the research that they're consuming is behavioural. So they discovered behavioural research in a big way in the aftermath of the financial crash 2008, and they've been increasingly applying it, syndicating it, and developing it into tools such as the new, as we have in the UK here, 6 conduct questions. And if any of our UK listeners are thinking, no, hang on a minute, it's 5 conduct questions, it isn't. They've expanded them, and increasingly the expansion is towards this direction of what they call exemplary conduct, leadership effectiveness, psychological safety, all sorts of terms that perhaps don't mean a great deal to people who are used to conventional risk analysis. So culture audit is the sort of umbrella term for the way that these tools are going to be applied, and I'm looking forward to discussing some more details on that. You may well say it keeps people awake at night. It does. These are not conventional value at risk assessment tools. It's quite different. It's different language, different method of assessment completely.
Yeah, it is different. I guess, Sam, we've had many conversations with people sitting in firms. What do you take away as the biggest pitfall that these accountability regimes present to management?
The biggest pitfall and pratfall, I think, is a legacy misunderstanding of what the global regulators mean by conduct and culture. The common acquaintance of ours, PJ, put it very well a couple of weeks ago in a working group, where they said that there was the anecdote about drink driving. So grandparent drank and drove, no problem at all, was very happy to do it. Father or parent didn't do it because they knew it broke the rules, and they don't do it because innately to them, it's the wrong thing to do. And where we are still on that spectrum as far as accountability, conduct, and culture, and understanding how that is all put together, and how you run a business, and how you run a business which is also profitable. We are still on that learning curve. So as far as accountability matrices are concerned, it's that is going to be the development.
Yeah, it is there are plenty of pitfalls there, and there's a lot to unpack. I guess. Well, let's go to Alan first, because Alan, you've had some experience in gluing these rules together. What does it take to take those different perspectives and turn them into one?
Yes. Well, I mean, the big driver behind doing this is that the analog manual processes, the filling in a spreadsheet, exactly as Sam says, isn't efficient, isn't the correct way to do it. We can all see that, but at the moment there's few other options available. So digitization has got to be the way to do this. And the reason why it's kind of not as rapidly taken on, as Sam's sort of a spectrum of wants and needs, if you like, the driver for that is because it's extremely difficult and extremely risky, right? There's obviously a lot of risk when you're doing it in an analog way, but there's also a lot of risk if you mess up the digitization. So it's got to be done properly. There's no kind of quick fix here. But obviously, with anything else in your life where you've digitized, to use Sam's kind of car analogy, where you've gone from a paper atlas to a sat nav sat on your dashboard, you can see the benefits of that straight away, right? And it's a similar experience from this point of view. And once you've achieved that, you have compliance by design, as we call it. So you plumb in your destination, the sat nav takes you there, and you're there. And if you want to add in different jurisdictions, you program the thing to allow you to do that. So you can then implement changes over time much more easily. And then, of course, you're also able to stitch together different elements. So this whole framework and how it glues together is done machine to machine. You're linking them, the different elements together. And obviously, the more digital all of those elements are, the better it is, and the closer you are to achieving a risk rating of 0.
Fantastic. So Sam took us down the path of drink driving. You turned it into sat navs and knowing where we want to go. Elizabeth, that all sounds very programmatic, and I know you from your background. How does that sound? And how do you audit that?
Yeah, I was laughing because I thought, but if we were only robots that followed the sat nav and didn't actually think, I know better than the sat nav, which of course is what happens in real life, isn't it? So look, I think people sometimes think that auditing culture is very woolly, very hard to do. I really think it's about being clear about what you're trying to achieve when you audit culture. It's culture, essentially what it boils down to is it's the behavioural norms that exist in the business that are systemically reinforced that help or hinder certain outcomes. And so being clear about what are the outcomes that you're expecting to see, and therefore what behaviours will help or hinder them, and how to reinforce them. That's what you're looking at when you're trying to audit culture. And I mean, there is a professional discipline behind behavioural science, has a lot of techniques and tools, as Roger kind of suggested earlier, that might be very different to what the kinds of tools that risk managers or compliance or lawyers or others might use, but they've got a pretty long tradition. But essentially what you're trying to do is to assess and observe and gather evidence on the type of behaviour that is reinforcing certain outcomes and that is being reinforced in the system. One last kind of point I'll just make on this, though, is that I don't think we should underestimate the definition of the outcomes, because I think Sam kind of mentioned this as well, that actually being very clear about the outcomes that we're striving for is, I think, the trickier bit when it comes to culture, trickier than we think it is.
Yeah, Alan, how do you program the sat nav to look at the outcome of I want to be at that party over there having a nice drink in the shade? It sounds fantastical.
Oh, no. No, it's certainly achievable. The issue you've got is the amount of dependencies in play, right? So for any, some will know this better than I, for any particular transaction or activity, you've got an awful lot of dependencies that could be in play depending on what you're doing, who you are, where you're doing it. So really the amount of work involved is in the digitization of that. Find all of those delta points, all those decision points, map all of those pathways out, and then you can present a proper digital pathway through. You can be guided through that pathway, so you can construct a proper, well, it's not exactly a framework, but a system where you can be presented with a series of options, and as you pick those options, you're basically taken through the pathway until you get to a result which says, this is allowed, this is not allowed, you can do it, but you need to do this, that, and the other alongside that. So we want to get to the point where we have an actionable outcome, but to do that, you've got to map everything sort of in the stages before you get to that point.
Yeah, I'm glad you picked on the actual outcome. I wanted to come back to Roger on this one, because a lot of the discussion around principles versus rules focuses more on not giving very prescriptive guidance. I mean, from your UK Culture Academy hat, how do you reconcile the difference that this kind of decision making requires?
This is the headache that a lot of heads of compliance tend to have, because they're used to very much the kind of black letter tick box mentality of, if you do this right, then everything will be fine. And what the regulator wants is a rather more principles based, let's try to behave better. And I think I see this whole thing as really quite a turning point, because we've moved beyond the original senior managers reporting regime, which is around detecting events of misconduct. And just to get this clear, it is still, of course, of great interest to detect and prevent misconduct. We're now moving far more into a mindset that says, why not let the industry present itself better? I mean, the whole financial regulated sector, and to put forward what they're calling exemplary conduct. And so the benefit of this is not just sort of small c or big C compliance. It's actually good business sense. You know, it helps with staff retention, customer satisfaction, retention of funds under management, and all of that good stuff. Since we're playing the analogies game, can I give you one more? It's like the primary school class. So you've got, 20 kids in the room, and there's always those few kids in the back row who are flicking paper pellets and talking to each other and not answering any questions or even listening in the first place. What we're trying to do is engage those difficult kids at the back of the room who never properly engage with the process, and get them to raise a hand and ask intelligent questions and answer and get involved in the dialogue. So if you could see the history of compliance as being a little bit of a standoff sometimes between the front office people and the compliance team, we're actually looking to get everyone engaged in the conversation. So it's about the conduct conversation to make culture better. By the way, one of the new tools the regulator's rolling out, already started in Australia and Singapore, coming to you in the UK soon, is this thing called the floor walk test. There were always conduct auditors kind of out in the field, but they tended to deal primarily with compliance people. Now they're going to the front office and asking direct questions. So to give you one quick example of that, tell me about your firm's values, if you can remember what those are from your values training. And just now give me an example of some work that you are doing yourself today in the front office that is putting one of those values into practice. Now, what I love about that is that there's no technical language in the question at all. It sounds incredibly straightforward, unless, of course, you've never thought about the question before, in which case it's a real rabbit in the headlights moment of what the hell am I going to say now? If you're already having that conversation, of course, easy as pie, because you can say, yeah, my team meeting, we've just talked about this and this, and how is this good for customers, and serving the economy by pumping credit through it, and all that good social positivity stuff that the Bank of England's talking about. But if you haven't started the conversation, you're stuck, and that's why it's such a great test. It's so easy to do the prep, by the way. A little bit of catalyzing work with workshops, discussions, team Q&As, and you're ready. It's not actually a great mystique thing at all. It doesn't require vast amounts of technical equipment or teams of lawyers. But what it does need is somebody who knows their way around the science, the regulatory design. Lawyers are very helpful, Sam, by the way. I'm not saying you should short circuit your legal compliance obligations under the senior manager's reporting regime, of course. But it's something a bit more profound than that. I'm not saying lawyers are not profound, of course. Perish the thought. It's a more basic. It's what I call socializing risk. You have a conversation in the front office, in the team, as part of your daily routine. Why are we taking these risks? What is the benefit to the customer of us doing things a certain way? Is there a better way of doing it? Can we discuss that? Can we get some fresh brains to the table to maybe think of other ways of solving problems, and so on?
Sam, just before you come in, I'd like to come back to Elizabeth, just because she's sitting in Australia where this bear regime is rolled out, and the floor walks are probably a bit more common. What is that like, and how do you show a supervisor, oh, hey, look, here's my MI report about how I answer that culture question?
Well, look, the regulators down here are certainly getting much closer to the front line in terms of their access to what's really going on. I think has gone, as you said, from dealing with the reg affairs team to actually getting access to direct information from frontline staff, and I think that that process probably really ramped up maybe 5 years ago, or maybe even a little more. So there's been some time to get to know what the difference is. And look, I think it's an interesting point that you make, Roger, about preparation, because I'll tell you that firms here in Australia, and probably everywhere, frankly, do try to prepare for these kinds of examinations from regulators. They employ consultants, they have communications out to staff and so on. But the reality is, actually, I'm not so sure that it is that easy to present a face which is not consistent with reality. You might be able to prepare someone for a very specific question, but I think regulators are also getting a bit cluier about how they get access to that information. So yeah, so if it was always the same question, if it was always the same people, they could probably do that. But some of the work that I've been involved in, it's not a standard set of questions at all. In fact, the kind of questions you get asked really depends on the answers that you give. So it's pretty hard to prepare for it. Yeah, and also it tends to be more than one question. So in order to, they have things like behavioural observations that some of the regulators down here are doing, and you could probably try to fake something for a few minutes or maybe an hour. But if you've got a regulator sitting and observing discussions for hours on end, it's pretty hard to keep up the pace.
Can I just clarify, as we say in the book, Elizabeth, and thank you for making that point, it is not about prepared answers. It's about a way of thinking. It's about having continuous engagement with it. And by the way, to Sam's point also about attestations, very important to have done the attestations, but as the regulator has said to me over here a few times, we get rather bored of what they call photocopied attestations. They all look the same. The whole point is senior managers are supposed to be writing their own personal account of how they're engaging. Same as the conversation.
Coming back to the point that I was raising my hand for, but actually we've moved on to further the point that I was going to raise, and it's become more and more obvious to me as this has gone on. There's a dichotomy between what Alan is discussing, where there is a decision tree that you can follow to end up with a good outcome, and as far as the psychologists and the behavioural science is concerned, and what the regulators want to see is an individual or a team or an organization not having to follow the decision tree, ending up at the end instantly. They should innately know, having made they can do the decision tree in their head, but they should innately know what the answer is. I can do this as long as I do that, or I can't do this. And that's one of the things that I think we were going to talk about was define what good looks like, so far as what technology can help you do and what the challenges are in digitizing this. I have to run an organization. The expectation is that I am running an organization that doesn't need to digitize this MI, because my people do it anyway. And that is, I think, the challenge from at least trying to advise firms on what the law looks like and how to implement it in practice. That's the major challenge. If you can get that right, bonza.
Sam, great point. Alan, how do you react to that?
Yes, it is a very good point. And we see this, we call this the transfer of knowledge, right? This is the gap between legal and compliance and the frontline team. How do you get what you need to know? You know, how am I supposed to innately understand what I'm allowed to do at any given point in my day? How do I transfer that knowledge out of the head of the legal and compliance team into the frontline team? And it's not easy. And what we see are legal and compliance teams fielding hundreds of queries a day, you know, in big organizations, a huge amount of queries every day, often the same questions over and over again. So this transfer of knowledge isn't happening well enough for you to be able to trust your frontline team to say, well, everyone knows, you can demonstrate everyone knows what they can do. They need a lot of help here. And in the training that's given, the manuals that are written, the policies that are drafted, the attestations that are done, this is obviously not working because we still have the hundreds of queries every day, despite having all this material. So our sort of objective at Apiax with digital compliance is to close this gap completely and say we can take the knowledge that's available in the legal and compliance team, we can digitize that, and then we serve it up in a way that you can access that information straight away, and you can then understand what it is you can do straight away. So you don't necessarily have to have it in your head. You know, it's a bit like Googling something, right? You know, you don't know every fact in the world, but Google's there and it will tell you what you need to know when you need to know it. And this is also important because during the day, you know, any given day, you could be doing something slightly out of the ordinary. You could be talking to a client in a different jurisdiction to where you normally engage with clients, or it's a different type of product you're dealing with. So there's always an element of uncertainty in your day-to-day business where you think, actually, I need to check this and I need to make sure I know what I'm doing. So the digital interface is what supports this and makes it instantaneous.
Roger, how's that sound to you? I mean, if some digital floor walk and a regulator asks them the magic question, is it okay if they just Google it?
I mean, it's great to have access to that. And I'm a huge fan of this whole kind of machine readable regulation thing that's coming in. So everyone has instant access to everything. I'd say Sam talked earlier about a dichotomy. I don't see it as actually two things pulling in opposite directions. I see it as two complementary facets of the same thing. And as Elizabeth and I say in the book, you need to have a sense of the grounding of the regulation, but you also need to have a practical sense of the application of it. And just take one example, which may sound a little bit left field at first, but you'll see where I'm going with this. A lot of firms use as one of their conduct measures training attendance. So the event of people attending training sessions, if you think about it, is an incredibly simple metric. It's, you know, was there a certain number of bums on seats or eyes on screen on a certain day fulfilling the training requirement? But that is really an input metric. It doesn't measure, was the knowledge lodging in people's heads? Were they putting it into action? How did it change what they did at the desk when they got back to the desk? You know, so I think it is so important not just to have the kind of technical input metrics on this, but the observational behavior stuff at the other end. And that's where the floor walk comes in. So it's kind of two halves of the same piece. Absolutely, you need the knowledge accessible and installed, you know, and well sorted in that way that Alan described. But I think also Alan's point was about knowledge transfer being put into action. And this is why we have observation or floor walk, as we tend to call it, because it's slightly less scary than talking about observation, which makes people think that we're psychoanalyzing them, but which of course we are, but that's another story.
Elizabeth, you're just as qualified on the psychoanalysis point. Do you think this is pretty much psychoanalyzing the staff?
Well, I'm going to sound like a dog with a bone here, but I want to come back to the outcomes that we're trying to achieve again, because I think what we're discussing here is some pretty clear outcomes. Are people complying with the law? Yes or no? And it might be. I'm not saying it's straightforward. It's clearly not easy to know in every scenario what the law is. But I think actually what trips people up in reality is that it's not just the law that people see as a stakeholder or in the outcome that they need to achieve. It's also shareholders and driving financial performance. But actually, those are the two traditional ones that everybody's had to deal with for a long time. I think in today's world, what's going to really be tripping people up is that there are many more stakeholders who have concerns that organizations will need to address and to not exploit. And so actually the right behavior might be the right behavior from a legal standpoint, but is it the right behavior for all these other stakeholders? And one stakeholder disagrees with this stakeholder. So what really is the outcome that you're trying to achieve? And then what kind of culture do you need to create to drive behaviors that reinforce these outcomes that you're not even sure at any moment in time what is the right one? So I think this is where it becomes very complicated in today's world.
Yeah, I mean, Alan, you must find this knowledge transfer pretty broad. I mean, there's a lot of things to take into account, right?
Yeah, Elizabeth is exactly right. It's horrible. It's horribly complex. It's awful. If you stood there today and you didn't, you had to start from scratch, you wouldn't configure it in the way that we have it now, right? So this wouldn't be the system that you put in place if you had to do it from today. But we do get over this, so or at least we try to get through this complexity by talking to people exactly like Sam. So when a lawyer configures a piece of legal advice or a legal opinion, they factored in the legal requirements and all the different dependencies there, as I've discussed. Then you can digitize that, hand that legal opinion over to, or well, indeed the current process is you would hand the written legal advice over to the legal and compliance folk, and then they would put on top of that their risk appetite. So exactly Elizabeth's point, but our conduct and our culture is such that we need to adapt this legal opinion in such a way that we can then fit it in with the way that we run our business. So you can still do that in a digital environment. You can still take the digital rules that Sam's output, for example, and then you can adjust those rules within a platform, and then they're queried in the same way. So it's still configurable, but obviously the process to do that, to obtain the advice, configure it, and then implement it becomes a matter of minutes, rather than a week or two of a legal and compliance person.
Can I ask a question, maybe a leading question, Your Honour? Diversity. It's not. It's one of the. It's not a stakeholder because it doesn't have a dimensional aspect, but it's something which is increasingly important as far as a consideration is concerned. So, how do we adapt the technology that we have to take a legal opinion or a machine readable outcome and turn it into a useful path for a business when there is this other dimension to it, which is, are we thinking about this problem in I say, in a non-pejorative sense, a biased way?
Roger, what do you think of that?
Did I just hear Sam saying, when I say bias, I'm not being pejorative? That's an interesting, leaving that aside for a second. So there are actually scales that are being developed, and one of the things that fascinates me talking to the FCA's sort of backroom people about this, I know Alan will also have a line to that, but they are at any given time with their own, in-house PhDists and others running a series of tests on new MIs, new indicators we might apply in the conduct and culture space. So one of those at the moment is a thing called the active open-mindedness scale, which has been the subject of a 2-year test that's running at the London School of Economics at the moment. That is a bundle of, from memory, 32 indicators, I think, which asked, are you the kind of person, just simple example, are you the kind of person that always uses the pre-installed browser on your laptop? Are you the kind of person that uses the same route to work every day, or do you vary your route? Do you always holiday in the same place? Do you, it's these kinds of things. Are you the kind of person who is essentially habit-based or actively intellectually curious? And I think that's a terrific thing. So that, just to take that back to diversity, and I think to disabuse people of a misconception that's quite common, diversity is not simply the thing that's done by surface indicators. And a lot of the kind of scoring and scorecard design is still based around the obvious things like gender diversity, ethnicity, possibly social origin and education, possibly sexual preference and stuff like that, which is all fantastic. But that's not true diversity. True diversity is cognitive diversity. So it's bringing as many different brains as possible to the table, as many different human experiences as possible. Now, they may be represented by the experience of being differently gendered or you know, from another country or from another sort of social background. That's all great. But again, the problem is that if we score it rather in the same way that we score training attendance, you know, oh, look, we've got 3 women at the table in a group of 10 people. That's our mandatory, you know, gender equality score, correct. It's the wrong angle of approach, essentially. What we're looking for is an atmosphere in which anyone can put a hand up, and anyone, particularly from different backgrounds. So you don't have somebody who's a 30-year career banker surrounded by other people who are 30-year career bankers in the room. You have marketing people, HR, legal, technical, you know, technology skilled people. And I'm not just talking about team meetings, at board meetings as well. So there's this myth of, you know, the great tech titan who has built up and sold their tech brand and now wants a second career in banking. The problem is they don't exist. There's probably a reason they call them unicorns. You know, they're fictitious. Nobody who's built up and sold a technology company very much wants a second career in banking, and that, unfortunately, is a systemic problem for the industry right now. And by the way, the regulator wouldn't let them in because they haven't got the right qualifications. There's a whole other systemic issue with that as well.
Yeah. But these rule sets are becoming more and more and more complicated. And just by applying this kind of thinking, you know, you can no longer just go to the rule book and read the word. You have to understand all the encapsulation and heuristics and coding and, you know, I'd
accept that. You need some grounding in science. And this is the reason that people like Elizabeth and I are kept quite busy now, and why the banks are recruiting more and more behavioral scientists. I've just written a paper for the LSE journal on this. You know, if you're a behavioral scientist, now is a perfect time to go into financial services, because the regulators are absorbing all this raw data from the research, and the banks, you know, the financial firms are really keen to get ahead of that. But the simple answer is invest a bit of time at industry level with something like UK Finance in a workshop, which will get you to know the basics. You know, read some books where people have done the digesting for you. I can't think of any right now, but I'm sure there's some out there. You know, and you don't need a PhD. I mean, we have 2 behavioral science PhDs on this call, possibly more, I'm not sure. But you don't need that background in order to get under the skin of this stuff. One of the reasons I love doing this is it's really quite fun taking people through the basics of this stuff. You know, 80% of behavioral science, by the way, kind of is codified common sense. It's the other 20% that's counterintuitive that's the difficult bit.
Can I, on the counterintuity, do we need to push back at all on the do we need to be the Kincanute here a little bit? Because I know, Roger, you and I have discussed this on LinkedIn and in other forums, but we are reaching the point, if we haven't already got there, where a salesperson is going to be on the hook for understanding his customers' behaviors, biases, wants, needs, suitability to an extent, to a level that is humanly impossible. So do we need, as those who kind of understand this, need to put a line in the sand to with Alan's former colleagues and go, do you know what, that's it. Sorry.
You make a very good point, Sam. Let's simplify the language a little bit. So let's not talk about biases, because, you know, people who are perhaps not familiar with that science might find that off-putting. Although, as I say, there's plenty of good sources you can read up on this. Can't think of any right now. But so if your issue is, as I understand it, that salespeople quite rightly are feeling that they could be kind of guilty of misconduct for failing to read the customer's bias. Or very often, I mean, an example of this, which we use in the classes all the time, is this thing called, you know, customer satisfaction survey or net promoter score. So the net promoter score is a classic example of an indicator that doesn't actually do what it says it does. A little bit like the Harvard bias test, IAT, which, you know, makes all sorts of claims, but actually is what we call a vanity metric. It gives you the answer that you want if you're marketing it. Which to me kind of disqualifies it as a reasonable. I'm going to have an enormous fight with the Harvard people now over that, but leaving that aside. So if you're using a net promoter score, if you're essentially saying to your customer at the point of sale, just after they bought a contract for whatever it is, are you happy with that? do you know what? They're going to say yes, even if they're not. Because we've got this thing called endowment bias, nothing to do with endowment mortgages. Endowment effect is, if you've just committed yourself to a big decision, whether it's buying an insurance contract or a pension or a fancy car or a suit of clothes or a holiday that you can't quite afford, your human brain is very keen to mitigate the anxiety that's triggered, the anxiety of having committed to the decision. And so what you do is reassure yourself.
Yes.
And therefore, if a salesperson or a customer service, follow-up helpline is saying, were you happy with that thing you just bought? You're going to say yes. Rather in the same way as if you've just bought a flashy car and your neighbor, looks over the hedge and says, oh, were you happy with it? Of course, you're going to say yes. You're not going to say, I feel like a fool having spent all this money. So those kinds of customer satisfaction tests are often unreliable. And I can absolutely understand why salespeople would feel nervous about it.
Yeah.
That doesn't really answer your question, but it kind of scopes the problem a little bit. Elizabeth probably can take that forward.
Guys, we could go on at this one forever. We've gone from sat navs and drunk driving tests all the way now on customer satisfaction. I think that there's a point here that there's a huge topic. I'd just like to step back as we wrap up now, because we are at time. And I'd like you all just to come in on your final summary. What's the real prize here? And there's plenty that we've talked about here in the discussion. Elizabeth, let's start with you. You wanted to get in. What's your big so what, and what's in it for people getting into this subject in a bit more deeper way?
Look, I think that where we need to go with looking at culture and looking at behaviour is reality. I think we need to be really honest about the outcomes we're trying to get, the trade-offs that we need to make, and the behaviour that's going to drive those. And if we're really honest with ourselves and we're really looking at reality, it becomes complicated. So that means that we need to be confident in being honest and admitting that we're not always going to get it right. And when we have these dashboards that assess culture, really what we need to get comfortable with is it not all being green? And so to your question about, what's the prize? The prize, if we're honest, is sustainable performance. Because I do believe that good behaviour and good conduct leads to sustainable performance over the long term. But if we're not honest, if we skate over things and we're not really saying what the trade-offs are for the outcomes we're looking for, then we're only shooting ourselves in the foot.
Thank you. Very, very well put. Sam?
I don't disagree with anything that Elizabeth just said, but my outcome is slightly different. My outcome is no surprises. It is easier and eventually cheaper to work with me and compliance people to prevent a surprise or to anticipate something and prevent it happening than it is to come to me after the surprise has happened and go, oh, what am I doing now? So take all of that and work constantly until you are happy with your level of risk.
Roger?
Let's see if we can do this in a minute. Although the new culture metrics are fancy and have wonderful names, things like psychological safety, cognitive diversity, reflexivity, biases, all that, actually what we're coming down to is a very simple notion. I always try to make the science as plain speaking as possible for people coming into this for the first time who are apprehensive. It's what actually happens. So direct observation on the front line is essentially about, is this landing? Are people having a conversation? Is it working? By the way, if you do all this right, it's less about compliance than durable, sustainable, resilient business value. Keeping people for longer, keeping customers happier so that they give you more money to do more with, and everybody benefits from that, Then the shareholders get their money. So we're not just chasing shareholders as like the primary stakeholder interesting. Also a bigger question of social benefit here. So how does the financial system deliver credit efficiently, for example? And how many people working within firms understand that that's what they're doing, see their job in those terms? So it's a much bigger, I think, much more interesting conversation than we've had historically.
Thank you. And last but not least, Al.
Yeah, I would agree with all that. So I think what we've heard there is, we have these processes that don't deliver very good outcomes at the moment and are then very expensive to retroactively fix, with Sam's help, of course. And I think what we're looking at is being able to take all of that, have the answers already available to us upstream, implement those in the business in a much more efficient way, and then you get a much better outcome for your customer, exactly as Roger says. And you can do all of this much more cheaply and efficiently than you can at the moment. So from my point of view, it's a no-brainer. But I might be in a party of one there, but that's my opinion.
Fantastic. That leaves me to wrap up, guys. Thank you all very much. I mean, what I hear is actually a very concrete story out of something that's very ethereal. I mean, effectively, Roger led with business value comes from the engineering that Alan talks about, and avoiding the Sam surprises and Elizabeth's reality check. So I think it's been a fantastic conversation. Thank you all very much for participating. Thank you for listening. If you do like what you hear, please subscribe. We have 2 more episodes this month already in the pipeline, and I'm sure we'll be back here talking more about accountability soon. Thanks all.
Thank you.
Thank you.
You can download the podcast via Spotify, Apple and Google, but also I'd encourage people to come to the JWG website, which, as hopefully you will know, is jwg-it.eu. Go to the Intelligence Hub and create your bespoke library.
This is Redcast,
where we shine a light on banking digitization.